and connect with the management of Spandana Spurti to talk about their key growth levers as well as whether or not food inflation is going to hamper their rural recovery. We've got Shalabh Saxena, who's the managing director and CEO of the company, with us on board. Thanks for joining in. I'm going to get straight to it because I want to just understand, given that recent channel checks suggest that there has been continued traction in the disbursement and in your collections. Can you give us some perspective as to how growth has been compared to the previous quarter?
So, we are under the silence period, but I'll give you a broad direction in terms of, how we are going. The rural demand, I heard your initial introduction, the rural demand continues to be strong, and this is a secular demand. It's an optimistic demand where people are, the Bharat of the country is really optimistic about the future, at least the next few quarters. That's one. Two is it is across the segments that we operate, irrespective of the geography. So to that extent, we are on the. I won't still call it a tailwind as yet, but it's a pretty strong trajectory that we are seeing when it comes to the fundamentals of business. And I think for the next 4 to 6 quarters, we should be good as an industry and as a company both.
Okay, so flagging out the recovery in the rural market, talking about the next 4 to 6 quarters, which is going to be quite good for the industry. But let's talk about the microfinance book in particular. We understand that you have the target of building the microfinance AUM to the level of 15,000 crores by FY25. What gives you that confidence? Are you on track for that? And also, given the entire worry about the asset quality, how are you looking at the microfinancing space?
So two answers to your question. Let me start with the first one, which is, how are we planning to get to the 15,000 number? It's 10 quarters from now as we speak. That's the target that we've set as far as the time limit or the time period is concerned. That's number one. Number two is that the industry itself coming out of COVID, I think it's slated to grow at about 16 to 18%. We are targeting a 30% plus growth. That's number two. Number three, and which is the most important thing, is that we are our distribution is in the eastern markets and the southern markets. The growth that we are projecting primarily is from the northern markets, where we have a very minuscule market share. So aggregate point of view, the southern markets, we as a philosophy at the management level, we like the customer acquisition growth led model. The ticket size is something that we are not very, we will always be conservative because this is a segment that you have to be very, very cautious about. So the new markets that we are going from a geography point of view and the strategy of new customer acquisition led growth is what we'll be focusing on. The additional number or the plus one number from the current number to a 15,000 will essentially primarily and predominantly come out of the 7 states that we very clearly articulated. They are drawn in the northern part, starting from Rajasthan, UP, Bihar, West Bengal, Jharkhand, and Haryana. So we have a clearly articulated plan on the distribution. In terms of the asset quality, the second point that you mentioned, I think COVID is behind us. That's number one. That's very important. Number one. Number two is, this is a segment which is the so-called bottom of the pyramid. It's the first to be hit when there is a crisis, and it will be the first to come out of a crisis. So to that extent, I think, all of that is behind us. People are optimistic in terms of the next few quarters and the way they are going to play out. So are our set of customers. So we are on track. Asset quality, this is an industry which delivers very good quality, provided you do things right and you have control on your from an audit and supervision perspective. If you have control, then you're fine to kind of deliver the asset quality along with volumes.
Sure, that was about the asset quality, but your net interest margin also seemed to have declined, at least in the last quarter, a tad bit, 9.9% versus 10.5%. What's the trajectory should we expect going forward? Will there be an improvement, or will it continue around the current mark given the credit cost?
So directionally, look, whatever we had to do, we've done with our book in the past, in the last quarter and the quarter before that. From an asset quality and an NIM perspective, I think the trajectory will be fine. We will be no different from the industry. Number one. Number two, we fundamentally believe in being at the median when it comes to the interest rates that are charged for the customer for the profile that we deal with. What will be entirely our focus will be quality and control. Delivering quality through control. That is what we've done over the last 6 months that the new management has been around. So, from that point of view, I think, we are fine. The NIMs should look up as we move, because the past is slowly, it's almost over, a tail part is left, maybe another quarter, and I think we should be fine with that. Very important to add that, we are talking, the end number that we've decided is 10 quarters away from now, but you will start seeing the trajectory going up as we speak from now on.
And, being a rural focused player catering to small marginal farmers, what is the impact of agri-inflation? Any change in the average ticket size on the back of that?
So contrary, I heard your initial part. Contrary to the popular belief, and I don't know if it's a belief or not, but any food inflation is good for the segment that we deal with, because they are a part of the supply cycle, which kind of is involved in, contributing to the general growth in the economy. And they play a pivotal role when it comes to really scaling up the various supply chains and the various manufacturing. They are the supply point to the other areas and the other industries. So, it's as I said, it is a secular growth and secular optimism across not just the bottom of the pyramid that we are talking about, be it dairy, be it milk, be it small scale industries that we are dealing with, and the people associated with that, the laborers, people who are there in the villages. We at Spandana, we are at about 90, our distribution is about 91% rural, so we really cater to the last mile in the Bharat of the country. And I think, what we are seeing is there is no exception to what I'm saying. There is a general optimism around. So food inflation or any sort of inflation, to a great extent kind of, in fact, helps us, is not a downside for us.
No, sure. That point is taken. Thanks very much for giving us that clarity as well as outlook on how disbursements and growth for the company is shaping up. That's Spandana's